we're going to deal with some special accounts right now, some special journals. And I'm just going to show you a transaction, one transaction for each, just as a demonstration. But the reason we do this is just to kind of expedite the journaling process. On one line, you can debit and credit several accounts at one time, and that's really the purpose of it. So let's first look at our sales journal. The sales journal only deals with any sales made on credit. If it is a cash sale, it does not go in the sales journal. And I think for your homework problem number 4, some of that is dealt with where you're dealing with 2 different journals. If there's any postings that you need to make, remember, if it's not a sale made on credit, it will not go in the sales journal. If it's a sale made for cash, it would go in the cash receipts journal. So remember that when you're doing that, because I think that problem only deals with the sales journal and I believe the single column purchases journal. But first, let's go ahead and do our first transaction. What we did is on March 2nd, we went ahead and made a sale to A company. We're going to say the invoice number, for our purposes, we'll just say the invoice number was 101. And we went ahead and sold them $5,000 worth of merchandise. So we're going to go ahead and by putting it in this account, accounts receivable debit, sales revenue credit, it takes care of basically 2 accounts at once. So that's what we sold it for. The next item we're dealing with, cost of goods sold, which would be a debit, and inventory, which would be a credit, is going to be what we paid for this merchandise inventory. This merchandise inventory cost us $3,000. Okay, now on a daily basis, we are going to go into our accounts receivable for the sales journal, our accounts receivable subsidiary ledger. What this is it's going to list out the various individuals or companies that owe us money for various sales on accounts. The control account for this is accounts receivable. We'll be posting the control account on a monthly basis. However, for the subsidiary ledger of accounts receivable, that's going to get posted daily. So we're going to go ahead and post this first item. Again, the person who purchased the merchandise inventory from us was A company. So we are going to go ahead and debit A company for $5,000. The balance for A company on March 2nd is $5,000. The reference is where it came from. It came from the sales journal page 1. And we're going to go ahead and check mark that, which means we posted it to the subsidiary ledger. Okay, next is our cash receipts journal. A company paid us, and they took advantage. We offered them a sales discount of 2%. They took advantage of it. So first, let's see how much that discount was. $5,000 multiplied by 2% is going to end up being $100. So the account we're going to credit in our cash receipts journal is A company. The cash that they paid us wasn't $5,000, right? It was the $5,000 minus the $100. So the cash we received was $4,900. Our sales discount is $100. And the amount we're going to credit to accounts receivable, of course, is $5,000. It's the cash we received plus the sales discount. So we're going to go ahead again, daily go into our accounts receivable subsidiary ledger, and we're going to record this. So this is coming from the cash receipts journal, page 1. Again, we're using cash receipts, page 1. It's a credit of $5,000 because they're paying us. The balance is now nothing, right? It's 0. They've paid us. Okay. Next, we're going to do the purchases journal. And we're not doing a multi-column. We're doing a single column, which I believe homework problem 4 also does a single column. So be careful. In a single column purchases journal, the only items you're going to record are your purchases of inventory. If you purchase, and it's purchases of inventory on account. If you purchased other items such as equipment and supplies and any other various items, it will not go in the purchases journal. If it's a single column purchases journal, which is what we're using and what they use in number 4 of the homework. So in this case, we're purchasing from J Company. The terms are 210 net 30, which means if we pay it within 10 days, we're going to get a 2% discount. And the amount of inventory we're purchasing is 4,000. And again, this makes it very simplistic. Shows debit inventory for 4,000 and credit accounts payable for 4,000. So accounts payable also has a subsidiary ledger, and we're going to go ahead and take the $4,000 from this purchase and go ahead and record it in our accounts payable subsidiary ledger. So the date of this is March 7th. We have a $4,000 credit. So our balance right now, as of March 7th, is $4,000. Again, we make daily postings to accounts payable to the subsidiary ledger. On a monthly basis, we would go into the control account, accounts payable. So let's go ahead and give our reference, which is P1, Purchases Journal, page 1. And we will go ahead and check that off because we've recorded it. Next is our cash payments journal. So we're going to go ahead and we are going to pay J Company. Let's just say the check number we use is 101. We do this on March 9th. The account, of course, we're going to debit is J Company because that's who we'll be paying. The account payable amount we're going to debit is the full amount, the $4,000. But we are going to take advantage of the discount. So again, the discount was 2% if we paid it off in 10 days. So $4,000 times 2% would be 80. So we are going to go ahead. We're using a perpetual inventory system. So because of that, we'll go right in and credit inventory for that discount. Credit inventory for the 80. And then the cash we end up paying out is $3,920. So now we're going to go into our subsidiary ledger again, our accounts payable subsidiary ledger. Page number is CP1, and we're going to go ahead and debit that full amount we've paid for accounts payable, $4,000. So our balance right now in accounts payable is 0. We are now going to post, and I have used, instead of ledgers, I'm using T accounts, but I have put account numbers next to each one. We're going to go ahead and total our monthly amounts and go ahead and post it to the appropriate ledger account.